Good morning, fellow option traders. This is Jeff, and welcome to the Daily Scan for Tuesday, November 19th, 2013. On tap for today, the only starred item here is the Employment Cost Index at 8:30, and then Uncle Ben speaks tonight at 7. Maybe a nice little bedtime story for us traders. Maybe it might be like, I don't know, a fairy tale, an evil fairy tale. Who knows? We just don't know, do we? Tomorrow's a big day. Thursday's going to be a big day. Friday is going to be kind of quiet. All right, let's take a look at what's happening across the ponds over in Asia. Kind of a mixed day, not a heavy one in either direction for any of the indexes, but mixed nonetheless. And in Europe, we are seeing a decidedly down, bearish looking market over there at lunchtime. So that's something to keep an eye on. All right, let's take a look at what's going on here in our market. Let me close this up here. We are looking at a gap down at the open, and I'll discuss that in a second. Gold is flat right now, and oil is still below 95 at 93.59. Sort of a good thing. All right, let's see here. Yesterday, I didn't put it up here, but yesterday I did jump into SPX. Let's go over here and take a look at all the accounts. Okay, so we'll close this one up here. Gold is still hanging in there okay. We could take a look at that on the Analyze tab. And it's pretty hard to tell here exactly what's going on. And really looking at this particular trade on the Analyze tab, because there's been so many rolls on it, doesn't really tell you anything. But we can see here that the current price is way down over here. And here is the strike 134 of our short call. So, well, I guess basically that's that. There's not much to say about that. We just kind of like hang in there and keep our powder dry, as they say, on that particular trade. Yesterday, I jumped in on SPX. Let me show you on the chart here a little bit about what's going on. Okay, so I came over here and I took a look at it shortly after the market opened, and we had a nice green candle looking here. So what I did was I put a limit order in that was 10 cents below the midpoint, and it did trigger on this candle here that begins at 1048, and I picked the 1780. So now later in the day, in the afternoon, starting at 2:45 or so, 20 minutes to 3, there was a big sell-off. But then it sort of recovered before it actually closed. So now I'm freaked out a little bit. There's a lot of risk on this trade, and it's for a short duration. So the first thing I did as I was looking at this morning was I put an alert in here at 1786. And then I thought, well, what if this thing really sells off in the morning? Do I want to be prepared to do something? So, right or wrong, and I'll be thinking about this before the market opens, I got plenty of time. Right or wrong, I put a order in to buy it back, to close it. Now, I'm going to lose money on it when I close it, so let's take a look here. What I did was I put a limit order in, a condition with a condition on it to go ahead and buy it back at market if the price of the underlying hits 1786. So I set that up here. That's this line right here, 1786. I just typed the number in here, and it tells me as of right now, I may lose more than this, but if it does trigger the order, that the trade will lose 169, and that's a lot better than the 880 that I would lose if I just let this thing rise. And of course, you know, when IV increases, it suppresses this white line because of the short strike being more valuable than the long strike. So there's more, IV is going to have more of an impact on that short strike than it would on the long strike, because the long strike's a little bit further out of the money. So it's going to push this white line down a little bit, and it may go up to as much as $200. But like I said, it's still better than the 880. Now, might the market recover tomorrow? Yes, it might, but you just don't know. So let's take a look at that, what that order looks like. And here I have set this up to say that I wanted to modify it. Let me just delete this. So here's the order right here. And I'll just say cancel or replace order, and then click on the little wheel over here, and we can take a look to see what this thing says. It says that I want to buy these two vertical SPXs at market. I have other choices here, but my experience, when you want to get out of SPX and you want to get out fast, you're going to be very close to the market. You're not going to be able to get midpoint, especially if it's moving fast, so you just want to get out. And I told it that I want to submit when at least one of the following conditions is met. So I just clicked here and selected the SPX, and I said when the market, or when the mark, or the last trade price is at or below 1786, to submit this order at market to buy those back. So it says here, I don't know if I can squish this up here or not. Yes, I can. So down here it gives you an explanation of what the order is. Wait until the following condition is satisfied. Mark price of the security, which is SPX, is less or equal to 1786. This order will show a wait condition status during waiting, and then submit the following order to buy these two verticals at current market price. The order is valid only for the current trading day. And that's it. So now it's sitting here. I'll just delete this. So now the order is sitting here, and I can cancel it before the market opens if that's what I decide to do. So I'll be keeping a close eye at the open this morning to see, because I don't want it, you know, coming down and basically taking my stop out and then marching back up today. So I'll take a look at what the sentiment is. All right, and that's about it for current positions. So let's just jump right over to the A+ list. And I mentioned that I'm going to be modifying the A+ list. So I'll probably make a separate video because I don't want to chew up a lot of time here for that. So I'll make a separate video on the changes that I'm going to make to the A+ list, and I hope to get to that today. I know I promised a lot of videos, special videos, and I need to get to them. So that's my goal for this week. There's at least 2 and maybe 3 videos waiting to come out. I've had some requests for some things too. So that's what my target is for this week. Let's start right away with Apple. And it came back down, and it's right on our trend line yesterday. So that was, it didn't have it just marched down right from the open basically, and it really sold off in the afternoon. I think the whole NASDAQ sold off in the afternoon, which is a bit of a surprise, but it may be telling us something. Since the NASDAQ in a lot of cases is sort of a leader in trends. So I'm not seeing anything here. I was looking for a bullish trade here, but I might be looking at a bearish trade just to finish out this week here, and you could call it a chase, but I'm getting a lot of confirmation on the bearish side that we're looking at another big flag here, or a pullback on Apple like we saw back here. So in violation of some of my rules here, I might be looking at something to the downside there. Amazon, I don't know about a calendar. I might do a calendar on Apple. Let's go back and take a look at Apple, where I might do a calendar. And for this week, following this trend line, this week I might be looking at maybe a 5-10 calendar. So keep that in mind. Okay. Alright, Amazon showing a tad bit of weakness throughout the entire day. Big sell-off in the afternoon, just like everything else. But this is really a very nice bullish looking trend line here. So we're hoping that, and we're getting confirmation in a lot of areas here. Not all of them, but this short-term MACD is down, but the moving average is still heading up. Same thing over here. So we are getting some confirmation. We have a PPS up, although we don't depend on this a whole heck of a lot, but it's still up. So there might be something coming along there in Amazon if the market turns around. Baidu, same thing. This trend line didn't hold. I might as well get rid of it because it's well, I'm going to leave it there. Yeah, I'm going to leave it there because we're shooting for this 180, and who knows, or I mean 140, and who knows, we may just get to it. We're looking at the normal expiration here, if I remember right. So 1220. So we might end up down there. Who knows? As far as our target is concerned for this week, nothing going. Let's just check here. That is the first week in December. That's what we're shooting for. So let me mark that on the calendar, on the chart, and here's the way that I would do that. The first week in December is here. So I could just, I'll just put a target here. And that's what we would be shooting for. So let's edit the properties, and we'll just change this color to a nice yellow. And that's what we're shooting for. Okay. Celgene. Same thing, kind of flat. Had a fairly strong day. Wasn't really affected all that much by the market. Still, our target is down here, and we're waiting for that one to mature a little bit. CF. Wow, they really sold off yesterday. That's a big sell-off when I was expecting it to continue up. So we're going to move our target over to here and see if it plays out that way. Chipotle. Target down here, waiting for it to come down and catch, so we have to let that one mature a little bit longer. Google. Same thing, waiting for it to come down, need some time. Goldman. Not really interested in Goldman right now, so I'm just going to take a pass on them. I'm leaving them on the list, but because I just want to let you know everything that's going to change. Alright, so we have a nice hook down here on LinkedIn, and I'm thinking that this would be a good trade here. So I'm putting an alert. And we'll be looking to get in with a bear call on that. All right. Mastercard. I wonder what they did yesterday. A pretty strong day for them. They kind of stubbed the sell-off in the afternoon. Good for them. I'm happy for them. They still closed up. Here was their open, and here was their close. So that's was a good day for them. Still not seeing it. Needs some time for it to get down to our target. Netflix broke out of its wedge here. We can take this out of here, I think. All right. Waiting for it to come down into our target area. Price line. Again, waiting for it to hit our target. Tesla already beat SPX to death. Oh my goodness. Wow. It just continues to tank. Where is it going to stop? Well, let's take a look here. Oh, it could, just 90? You want to do a calendar at 90? Let's see here. Let's extrapolate this out a little bit here. And we're not looking for it, for a trend like forever to continue down like this. I'm looking at short term. So, actually, I think because it's red, I want to go on the bottom here. I think that would be a little bit more accurate. Oops. Okay. Now, the end of this week, we would be at maybe around 112. Would you want to take a 110 on that? Maybe. So a calendar on Tesla might be in the works. And the reason why I'm shooting at calendars is just because they're probably pretty cheap. Let's take a look at, say, a 110 calendar for this week for Tesla. All right, so 110. It's not even on here, but we'll just go ahead. We want to put calendar, right? Why am I not getting anything here? At 110. I'm not getting data here. What's going on? Oh, you know what they did? They opened up new strikes. That's what it is. Okay, so I'm seeing $92 for this. We do a risk profile, and this could pay back a couple hundred. So that's why I'm saying that this could be a good trade. A very good trade. Okay. Here's Visa. Still waiting for it to hit our target. I hit the pause a while back. I think it was after I wrote down Tesla. So I forgot to unpause it. My mistake, but I think we're okay. So here's Visa waiting for it to hit our target. All right, so recap, LinkedIn, bear call alert for today, and then a couple of very attractive put calendars on both Apple and Tesla. So that's it for today. Thanks a heap for watching. Have a great day and happy trading.